Okay. All right. In this new video, I'm going to be uh, discussing a strategy, a trade strategy, and the strategy is called three duck strategy. The three duck strategy. Okay. I call it the three duck strategy. The three duck strategy. Now, the three duck strategy is one that it uses three different time frames to confirm a trade. Okay, so we're going to be using three different time frames to confirm this trade. So I'm going to bring in the same instrument, USD/JPY. I'll open a new chart and then open a new chart again. So three chart windows right now. One is 4 hours, one is 1 hour, and the last one is going to be 5 minutes. Okay, we have a 4 hour, we have 1 hour, and we have 5 minutes. So that's what we need. So now what we need here are four things rather. We have three of them already, three time frames, and then the last one is one moving average. Okay, one simple moving average, no exponential, simple moving average. So now I'm going to bring in the moving average to finish this one. So I'll go to insert indicators, trend, and moving average, and then I'll do a 60 simple moving average. I'll keep the color red and taking it a little. Let me use this and click OK. So now we have our first moving average for the 4 hours. I'm switch over to 1 hour as well. Insert, let me bring in candle, increase the size of the candle, and then bring in the moving average again. Insert indicators, trends, moving average, and I'm maintaining the same thing. Okay, and then the last one on the 5 minutes will do the same thing. Insert indicators, trend, moving average, and good. So now we're maintaining the same thing, the exact same thing. Now what we're looking for is for price to be either above or below this moving average. Okay, that's our first confirmation. Price is either above or below the moving average, and it has to be above or below the moving average in all the time frames at the same time, which means it must be on the same side of this moving average in all the time frames. On 4 hours is currently below the moving average, which means we have a downtrend, which means we have a sell at the moment on 4 hours. So we switch to 1 hour and confirm that we still have a sell on 1 hour as well. Can you see that? And then we'll switch to 5 minutes now and confirm that we still have a sell. Candle, increase the size of the candle a bit. So our price is still below the 5 minutes moving average as well, which is good. Now the final confirmation is for price to break below the last swing low. Now a swing low is a point where you have at least two higher points on the right and left of that point. What that means is this: I have this region here. Let me get one of my tools. Insert shapes. So I have this point here. This is the lowest point in the current price. We have two other swing lows. One is here, one is at this point, shapes. One is here at this point. Can you see that? And then we still have one at this point as well. We still have a swing low here as well. And then on the left side of that first swing low that we picked, we still see a couple of other swing lows there too. This is one here, and I just want to take time to point all this out so you don't get it mixed up. And this is another one. So these are different swing lows, but this one here is the largest of the swing lows. Okay, this one here is the largest of the swing lows. I'm going to change that one's color to red, which is shoot. Okay, so now what we're waiting for is for price to break below this swing low. Now what I like to do is not to use a rectangle there, but to use a horizontal line. Usually we just drop a horizontal line there, and then all I'm looking for is for price to close below this my horizontal line. Once this guy moves down on 5 minutes, please take note of that. That is on 5 minutes. We've confirmed 4 hours and 1 hour. We are not using that anymore. We're coming to 5 minutes now. 5 minutes is for execution of the trade. 4 hours and 1 hour is for confirmation of trend. Okay, so to execute the trade now, I want price to close below this. Once it closes below this one, then I'm going to shoot. If it doesn't close below this, it's telling me that there might be a change in trend right now. It might close above this and continue up. So if I take a sell right now because everything has aligned to the downside, then I might actually be losing that trade. So I want to be careful not to do that. Okay, are we clear on that? So that is how this works. So you have 3 different time frames to do that. Now another way to do it is to use one single time frame. Okay, you can also do this with a single time frame. Let me remove these other 2 time frames. So now what you need to do here is to simply change the time frame up here. Go to 4 hours, confirm that it's below this current price. You see that the line I dropped on 4 hours is still, on 5 minutes is still there. Switch to 1 hour, confirm that the price action is still below the moving average as well, and then switch to 5 minutes now to execute your trade. So what we're waiting for is price to close below this. Once price closes below this, I'll be taking a sell, and I'll keep selling until price closes above the moving average, of course. Okay, because as price goes down, moving average is going to be following it. Now this is the 3 ducks strategy. The first duck is the 4 hour, the second duck is in the 1 hour, and the third duck, which is the most important duck, is on the 5 minutes, which is the maintenance of the position below or above the moving average, as well as a closure of a candle below the lowest low if for a sell and above the highest high for a buy. So let's try it on a different time frame, on a different instrument. Now let me just bring in Euro USD here, and then let's switch to 4 hours. So on 4 hours we have price just breaking above the the 60 moving average. I'll switch to 1 hour as well. Price is way above the the 60 moving average here as well. And then finally I go to 5 minutes, and then price is way above. So what we are waiting for is what now? We're waiting for price to close above this point. So if this candle, if any of the candles finally climb and gets to this point and close above here, then we will be buying from this point upward. So this is a 3 duck strategy, and you can use it on basically any instrument. So let me give you an instance. Assuming we found price while it was still okay, so in fact let's take something else, maybe gold. Let me use gold now. So on 4 hours we have the same, price above. On 1 hour we have the same thing, price is above. Then we switch to 5 minutes, we have the same thing, price is above. So for us to take a buy here, we'll be waiting for price to close above, remember that, the highest high point we have. So we're going to have to wait for price to close above here on 5 minutes before we take a buy here now. Okay, so it's as simple as that. If you have any questions, you know where to find me. Thank you for watching this. More strategies are coming up, so be sure to check out our strategies. If you stumble on this strategy by mistake or by error, well, we can still provide us